John Taylor with us here on InsideTrack. He is, of course, the founder and CEO of FX Concepts, the world's largest currency hedge fund. He's made a ton of money over the years betting on currencies and against currencies. Not this year. He's having a horrific year, as John was just telling us, because he's been betting against the euro. Today's shot in the arm doesn't really convince you. You're still going against the euro, aren't you, John?
Well, yes, I am going against the euro. The problem with the currency management sometimes is that the long term can get in the way of the short term. And the short term, the euro is perhaps not such a bad currency. But in the long term, it's in trouble. What strikes you about today's ECB results? I know you mentioned 523 banks. That's a huge number. I couldn't believe how many banks there were. 489 billion is more than the top end of the range, but understandable. 3-year money. At a low price, you can give it back after a year. It's a giveaway, right? This is QE in another form. But does it scare you at all how much was taken up, just how many problems there are for these banks? Well, it doesn't scare me that it's been taken up. What scares me is what the hell are they going to do with it, right? What are they going to do with it? Well, if they buy Greek debt or whatever, there's a lot of money in that, but you're sure to lose money in the end. I don't think they'll buy Greek debt, but they'll buy Spanish and Italian debt. And if Spain or Italy gets into trouble, then the ECB and all of these banks will be in even more trouble. And what comes next? We're going into 2012. We now know there's another European summit on the agenda, January 30th. Right. Can we expect anything different? That's a long time for a European summit. The spread is a lot longer than it has been lately. That's a good sign. You mean the time between now and the summit? That's right. Before, I think we had 15 in the last 12 months or something. Well, it means they're less tense. Things are better, and things are better. This strategy that they have is a good one, but it doesn't solve the fact that we have a solvency crisis, not a liquidity crisis. And we've seen that tension ease in financial markets. We see Spanish 10-year bond yields back down to 5%, Italian yields back down to 6%. Should we just enjoy this while it lasts? Is it going to get worse in the new year? Yeah, it's going to get worse, but I think it'll take until April. The first quarter will be all right. The second quarter will be, oh my God, this didn't work. And what happens to the euro? Then it goes down. Finally, the euro will go down. In fact, I'm hoping that it goes down now, not because it's good for me, but because it's good for the world. The euro ought to be lower than it is, because that will help the exports. That will help everybody in Europe make more money. We're showing a chart of the euro right now where it is. Look how remarkably resilient it has remained during 2011. You expect it to go down from these 130 levels all the way down to 112 and possibly even 1-to-1. Yeah. I mean, it was 90 in the recession in 2002, so it's not the end of the world if it does that. In fact, it's good. It will create inflation in Germany, and the Germans won't like that, but it certainly will help the exports of Italy and Portugal and Ireland and all these other countries. And those are the ones that need the help, not Germany. Germany's doing great, thank you. I want to ask you about Germany. You said something provocative in your latest research note about what Germany is trying to do to the euro. Well, it looks like Germany's trying to wreck the euro because they're the only country that's doing so well, and they're not leaning towards the rest. I mean, it is 250 million people. Sorry, numbers get too large sometimes. And Germany's only about a third of them. So we have 2/3 of the place doing badly and 1/3 doing well. What's wrong with Germany? Why don't they lean towards the others? Help France out. They stand to lose a lot if the euro collapses or breaks apart. Right. They do. And let's face it, Germany is just exporting. 60% of Germany's exports go to the Eurozone. They're making a ton of money off of these other people. And when you look at the other side, only 1% of Germany's imports are from Spain, exactly the same that they were 20 years ago. John, your best guess next year at this time, the end of 2012, does the euro look the way it does right now with all 17 nations in it? No, I think we're going to lose at least one, and that's obviously Greece. In the next year? Yeah, and perhaps by looking at the numbers, whatever, March, when there are a lot of big payments that the Greeks have to make, is when the Greeks will leave. 2012, year of the dollar, sounds like. Yeah. Against the euro or other major currencies too? Well, against the euro, and because it's a global recession, it's also against the commodity currencies and maybe the Asian exporters as well. So it looks like a pretty good year for the dollar.
Global recession. U.S. goes back into recession too next year?
Yeah, Europe's going to drag us in there. And let's face it, these guys down in Washington are not helping us, right? Even if they pass everything that they're arguing about, all we have is the same stimulus we had this year, and we're doing fine, but not as well as we could.
When it comes to the U.S., are you talking about a mild recession or something more severe?
A mild recession, but the real risk is that we can't have any fiscal stimulus. The Republicans won't allow it, and logic won't allow it either. We have to put that in there. And interest rates are already at zero. Pretty hard to know how you're going to stimulate the economy if it starts to get worse. So we're running a little bit on, I hope it's going to work out, right?
Running a little bit on empty. All right. Thank you for the less than optimistic forecast for 2012. He says bet against the euro. It's been a money-losing trade for John Taylor, but he's sticking with it in the new year. CEO and founder of FX Concepts, the world's largest currency hedge fund.